Good day. My name is John T. Sachs. I'm a partner at Geltech, and today's topic of discussion is alternative investments. And joining me is Anil Govind of Innovate Solutions. Hi, Anil.
Hi, Jonty. How are you doing?
Very well, thank you, and thank you for taking the time. Anil, maybe just to start off, could you give us some background into yourself and into your business?
Yeah, thanks, Jonty. And on my side, basically, name is Anil Govind. Basically, a director of Innovate Alternative Assets and Investments and Solutions, PDY. And in relation to my experience, I've got 28 years experience as a CA and been doing alternative investments in the early days of my CA career also. And in terms of what we do, alternative asset, in our opinion, is something where it's outside the frame of kind of listed environment or the FSCA regulated environment in sometimes. It relates to private equity, it relates to lending assets, it relates to property, which doesn't require a broker, and such, So, yeah, it's held up pretty well in this time, yeah.
Okay, interesting. So I think for the viewers, basically, alternative investments are investments other than equities, bonds, and cash. And they are, as Anil's pointing out, they're very broad and really covers most other investments. Obviously, they are seen as, in somewhat cases, more high risk investments, particularly because they might not be governed by the FSCA or some other regulation. So there's always a bit of a high risk flavor to these type of investments, but potentially the yields are significantly higher. Anil, my understanding is that there's a number of themes, obviously, as I just mentioned, but a theme that's really starting to stand out now is impact investing. Maybe if you could give us some context into what's happening in the market around impact investing.
Yeah, I think impact investment is taking a leaf out of the private equity space. It's just that where you have something that's based on innovation or based on, let's call it healthcare technology or innovation, or something that's going to have an impact in the social environment, or it's going to have an impact with people in terms of how they live their lives. We basically find, impact investment is standing out. Recently, we did an impact investment in the UK, which is in the healthcare sector, specifically focused on the scientific innovation and finding out solutions to healthcare problems that are happening in the world right now. In our side also, when you look at private equity, what's been good is that it's held up much better. It doesn't have the liquidity of a listed share, which also takes effect of the market conditions at a time. And it actually safeguarded investment in that space, although it does face the same fundamental challenges as a listed share. I don't totally agree that all alternative investments are high risk. We have some moderate high risk where property cover is 2:1, and sometimes it's even higher. And where the security is higher, and that reduces the risk, because if the venture or the play doesn't work out, then you can go back to the security, and which is like notarial bond security on property on those kind of cases. Yeah.
Okay, very, very interesting. One theme that does fall, within the alternative investment space is Section 12J, and as a business, we obviously we form Section 12J funds, and we're a fund manager. Maybe if you could give us some of your insight, what's your view on Section 12J? Obviously, I know that you support Section 12J funds, and what themes do you find exciting?
Yeah, on 12J, we're pretty strong supporters of 12J. However, we're pretty strong on making sure the due diligence of the 12Js we support are there. So in terms of 12J, the benefit is already you're getting a tax benefit, which is usually around 8.4% if it's a client at the marginal tax rate. So, before you start, you've got 45% upfront, which is a really big start. However, the due diligence and the quality of the 12J is just as important. And we look at things like sustainability, we look at long-term growth, We look at whether they're serving a gap in the market. We do like technology and technology plays. And on the lower risk side is where we put most of our clients' money, lower to moderate risk side. And that is kind of rental assets, you know, basically supplying business to business preferably rather than business to consumer. And in such assets where we haven't really given a big punt to the typical property investments, although property and tourism has been a big part of 12J. In our own scenario, we've kind of punted more the rental assets, technology plays, and more the private equity plays, which is like investing in businesses that can especially do well in this kind of time.
Yeah, I think this time in the world is an unprecedented one, obviously around COVID-19. So given that the equity market is doing significantly poor or significantly down, what do you think the impact of COVID-19 will have on the alternative investment market? Do you think it'll increase clients' appetite for alternative investments? How do you foresee the market over the next 6 to 18 months?
I think the 12J industry, especially for all 12J companies that raise monies this year, generally, you can be much more selective. The 12J companies that raise their cash and want to deploy. So already they are at an advantage compared to existing established businesses that may not perform as well in a COVID environment. And also 12J has the option to select shares, select companies that actually do well in a COVID environment. Example, the technology plays, etc. And the one thing I pick up that obviously, as I said earlier, the listed environment, they already got the market risk, the share risk. So, I mean, as you can see with the banks and, where there's a 40% reduction in the price, it's kind of a little insulated in a private equity space. That's the main positive. And you've got a 5-year timeline, which is really what you require in a COVID environment, because kind of people start thinking in a panic in a short-term basis. And I think there's still more to go in the next 18 months. I don't think it's the end of it in the listed environment. In my mind, the market's overrun a bit. And yeah, there's definitely space for 12J and also companies that may need help going into the future, going to the next year to 18 months, where they are solid businesses, but because of the COVID effect and lack of cash flows, etc., they may need a private equity injection, and it may provide an opportunity for the 12J houses to kind of invest in those companies, solid companies that kind of had the effect. Yeah.
No, I agree with you completely. I recently wrote an article for FA News on the opportunity in the private equity space, because, as you rightfully say, there are a number of unbelievable, exceptional businesses who pre-COVID would never have dreamt of accepting capital from a third party as an investor, because, the business was or had been for many years performing exceptionally well. But now many of them don't have the cash balance or the balance sheet to weather the storm. And unless at some point in time shortly they seek out a solid long-term private equity partner, they might find themselves out of business, and then at the last minute looking for a partner and having to sell at a fire sale price. So there's definitely going to be a significant need. I think 12J funds are well placed to invest into these businesses, because they have to take a minimum, in most cases, a 5-year view on the opportunity. But if I could just ask,
can I add something there, Jyoti? Yeah, the one also positive is because the 12J house has given the taxpayers some benefit from the tax side. The pressure on the return is definitely much less than an angel investor that would normally try to take a major slice of that company that's in trouble. And together with that, where they kind of have where the kind of board gets diluted from that angel investor to a point that may not be suitable to the principal. So I think a 12J has a really good place, because their demands on returns are a little bit more better than an angel investor. I just wanted to share that.
Yeah, and I fully agree. I think just to add, the benefit of either a 12J or your vanilla private equity house investing in these SMEs is they play a hands-on role in managing or assisting with management of the business. So, entrepreneur who's struggling and is a recipient of private equity funding, often they receive a new director on the board who potentially can inject new thinking, new thoughts, a new way of doing business. And, with having experience around your boardroom, will potentially lead to success. So I think it's something that the market's going to have to embrace, or we're just going to see more and more job losses, as the president today in his email mentioned, that they need entrepreneurs to invest into SA. I think just for our viewers, from their perspective, if they were going to allocate funds to alternative investments, what would you say as a percentage of their annual investment should they allocate to an alternative investment?
I think generally in the alternative investment space, you start at around 10%. We in our company as Innovate Alternative Assets, we usually look at around 15 to 20% on average. And also it depends on the risk of if we have some with moderate risk, then that allows that 20% target. We have some alternatives, as you said, it's got a 2:1 notarial bond property cover if it doesn't work out. So those are really much lower risk, and I think then you can go towards 20%. And for the average guy, I would say I would start at around 10%. It's got a good place. It's got a tax benefit also, 12Gs especially. And right now, I think I really believe that impact investing and in private equity is really the place to be. Our company is a sign of that. I mean, while all of this was going on, we haven't had any negative news. There was just one opportunity that had a bit of issues, but all the stuff in the normal alternative space, even outside 12J, we had a grain opportunity that was doing really well, and going on. There weren't really major issues in the ones we had selected in the last 2 years. Yeah, so yeah, 10 to 20% I think but 10% is a starting point. Sure.
Okay. Yeah, I think that's a very fair assessment. Anil, thank you very much for your time. It's been great having you and interviewing you. And we look forward to doing business in the future. Thank you very much.
Pleasure, John T. And well done on Geltech. You guys are doing a great job. Good show.
Appreciate it. Cheers.
Bye.